The following program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments, surpassing the markets in the long term. The information shared in the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And it is Saturday. We are here on the radio, KLFE, The Answer. So we must have the answer about money. That's the name of the show. We're going to be talking about that. I just got back from the National Association of Pension Advisors. Now, this is a national conference, brings together, there were over 2,000 people, 2,000 of my closest friends, 2,000 people altogether, over 1,000 of the top pension fund advisors, and about 1,000 people who are supportive or support vendors to the 401k market primarily, but also 403b and the other pension plans that exist. Comes together. It's a 3-day conference, begins on a Sunday, runs through Tuesday. You hear from a lot of people. It's significant enough that it brought out the Assistant Treasury Secretary as the keynote address to begin the conference. But giving you an overview, and I want to talk about the conference because I think it's a critical conference. I think there were things that were said, there were things that were not said that I'm going to talk about today because I think they're important to understand. But giving the overview, where we started at, last year there was an emphasis on electronic delivery of documents because the cost of delivering paper documents, and when you're involved in a 401k, there is a ton of paper. When the investment paperwork weighs as much as the investments themselves, you have almost enough to get the 401k plan started. It's a huge amount of paper that goes. The estimate was that it cost $300 billion a year just in paperwork that's sent out for 401k plans. So there was a lot of emphasis in 2018 at the conference to say we need to do something about it. And of course, we got something done. It was passed into the law that delivery of documents and disclosure documents could be done electronically. That's a savings in the industry of $300 billion. And that should, by all rights, go to the participants. I have doubts that it really goes to the participants, but that was the idea behind it. This year, there were a number of additional proposals. But to begin with an overview, as we talked in the first part of the meeting, we began to talk about the change that's going on in the country. And I think there's nothing more significant than looking at the tweets. President Trump has 41 million followers on Twitter. 41 million. But do you know who's number two? Number two is Alexandria Ocasio-Cortez, AOC. She has 14 million followers. That's more than Obama has. Obama had 5 million followers. Kamala Harris has 4.7. That's more than the news organization. CNN, 3.3. Nancy Pelosi has 2.5 million. ABC has 2.3 million. There's a shift that seems to be going on in the country. In the last election, we saw a shift toward liberal ideas. We're seeing even more of that happen now. And a lot of ideas that were maybe 5 or 10 years ago considered pretty radical are not being considered very radical. We've seen the advent of the proposal of the Green New Deal. And there's a reason that most of the Democratic nominees or those Democratic candidates that are trying to become president of the United States Most have signed off on the Green New Deal. Is there a reason for it? Yeah, there is a reason for it. Let me take an aside out just to talk about one aspect is climate change. Climate change is something that, with the Green New Deal, was attractive to environmentalists, but also attractive to blue-collar workers who are threatened or whose jobs are threatened. And it's not just something that's a political thing, because corporations are taking positive action. Just a week or two ago, Volkswagen announced to their 40,000 suppliers that unless their suppliers and vendors cut emissions, they would no longer be purchasing from those vendors. You know, when you think about some of the things that have gone on in the United States, Houston had that flood, the worst flood they'd had in 500 years. 5 of the 20 worst wildfires in California happened in the year 2017. Insurers last year paid out $135 billion to cover climate-related disasters in the U.S., but the uninsured was $195 million. There are studies that are beginning to show that 2 to 3% of globally listed companies, 2 to 3%, no, I got the numbers wrong. 2 to 3% of the market value, the enterprise value of 11,000 globally listed companies are affected and will be affected by climate change. Some companies will lose up to 20% of their value because of the climate. Some companies like Microsoft, AT&T, and NVIDIA are actually installing solar farms to supply their own electricity. So it's a significant impact. It's going on. It's a political, one of those political hot balls, but it's something you need to be aware of. And yeah, there's other aspects, affordable housing, living wages. And my guess it's going to be difficult to get a lot of that through the government and to be put into effect. But at least as you go forward, if you're a listener to this program, you should be aware these things are going to affect investments. And we're going to be talking more over the next year or 2 years about how they affect investments, because they will. But anyway, let me come back to the conference. That was only a small part. The main speaker to lead off the conference was Preston Rutledge, the Assistant Secretary of the Department of Labor. I said Department of Treasury at the beginning. It's the Department of Labor. The Department of Labor is the government oversight of the pension market. And there are, as he mentioned, 703,000 401k plans. There is $9.8 trillion invested in 401ks. And this is what he said. There's a concern about it. This is what he did not say. This is what he didn't say. In 2009, 401k plans had $3.3 trillion. In 2016, $5.6 trillion. Now, the difference between the 5.6 and the 9.8 actually is in other plans besides 401ks. Now, if you look at the difference between 2009 and 2016, that's an increase of those plans of 70%. But if you look even deeper, the Standard & Poor's total return increased 148%, which means that the 401k balances or the 401k assets were growing only half as fast as the Standard & Poor's. Only half. Consider this as well, the fact that participants were actually funding additional monies into the 401ks. When you take the additional they put in and the returns that were set up in the 401ks, less than half of what the Standard & Poor's did. You know, we do some 401k plans at Adams Financial Concepts. One of the guiding principles is we look at our plans and how they perform. You know, if you look at defined benefit plans, those plans where people were guaranteed an amount equal to 80% or 70% of salary or 50% or whatever, depending upon it. Defined benefit plans were funded at a 4% level. Today, they were talking about 401ks being funded at 10%, the equivalent. There's another way to look at it as well. Vanguard did a study. In 2007, the average balance in a 401k plan was $92,000. In 2017, 10 years later, the average balance was $103,000. An increase of only $11,000. In real terms, if you take the inflation amount into it, it was a negative return on the average balance. Financial advisors sell 401ks based on what they call the 3 F's: the funds, the fees, and the fact of the fiduciary responsibility of the sponsor. I feel that's, and I'm departing from what was said at the conference, but I feel that's wrong. We should be talking about the 4 P's: the participation, because participation rates run less than 75%, the preparation for retirement, the performance, which is really significant, and the profitability. That was what wasn't being said. What was being said as well is there's 135 million full and part-time people, but only 51% had access to a direct contribution of 401k or equivalent type plan. 25% of the lowest paid workers across the U.S., only 25% of the lowest paid workers had access to those plans. That's very significant. We're coming to a commercial break. Don't go away, because those have application as to what is coming legislatively down the road. Think about it. We'll be back right after the commercial break and talk more about this, because it's really important. You'll want to know. And I have a great guest. You'll want to hear what she has to say too. We'll be right back.
More About Money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So one of the issues that was raised by the Assistant Secretary of the Department of Labor was the fact that there's 135 million full and part-time people. Only 51% of those 135 million have access to a direct contribution, a 401k or equivalent type plan. 25% of the lowest paid workers in the U.S. have no access to those plans. The fact is, 98% of U.S. businesses employ fewer than 100 employees. But of those businesses, fewer than 15% offer a 401k. 41% of millennials have no access to a 401k, but surprisingly, even 30% of baby boomers have no access. It's a major issue. Retirement and running out of money in surveys is the number one concern of every age group. And that gets the attention of the politicians in Washington, D.C., both the administration and Congress as well. The president signed last year an executive order addressing or asking the Department of Labor to address the issue. And they've done a survey asking small employers why they don't offer it. 37% said it's too expensive to set up. And it is expensive. $1,500 for 3 to 6 employees to set it up, and $1,000 a year to maintain. That's the approximate. So for a third of the company, a little over a third of the companies, they say it's too expensive to set up. 22% say they don't have the resources, which goes back to the too expensive. 17% said employees are not interested. I don't really believe that. I think that most employees are interested in it. 7% said they hadn't thought about it. 5% said the company that they were running was too new. That's a valid. And then there were 11% that had other reasons. But what's happening is legislation that a couple years ago died in Congress has been revived. It's called RISA, the Retirement Income and Securities Act, or that's where it's been revised. And the idea is to set up multiple employer plans. They're called now professional employer organizations. And they've been around for a while, multiple employer plans. Yes, you see them especially in associations like the technical people, the software people in Seattle. I've forgotten the name of the organization, but they have one. Master Builders has one. They set up an organization so that they get the economies of scale by setting up a larger organization. You spread the $1,500 fee over. You spread the $1,000 fee across. But the way the laws are written today, and there are multiple employer plans that exist, but the way they're set up now is that each employer has to furnish one board member. So if you have 10 plans, you have 10 board members. But one of those board members has to be the managing member, and that managing member takes the full fiduciary responsibility, the full liability. So if one of the members doesn't put money into their participant accounts, their employer's accounts, or in other ways doesn't fund the right amount or doesn't do something correctly, that one person who's the fiduciary takes personal liability. Personal, not corporate liability, not something that's shielded, takes personal liability for any problems that exist. And there's just not too many business owners who are willing to accept that responsibility. It's become a real issue, and that's why there's so few of these plans. There are a few around. And I spent a fair amount of time talking to Pentegra, who runs a number of these plans. We spent a considerable amount of time because part of the legislation, and was a feeling at the conference that RISA could pass by August of this year. It could pass by August of this year, setting up a new type of organization where the sponsor of the 401k plans, the sponsor of the professional employer organizations, the PEOs as they're called, the sponsor could be a financial advisor rather than a company owner, could be a financial advisor. Now, what's going to happen, of course, is that the big firms, the Merrills and the Wells Fargos, are not going to even get anywhere close to that. But you will find some of us, and I am interested, some of us will take on that responsibility. Right now for 401k plans, I take on a lot of the liability for those plans because I fall under the law of what's called a 338 fiduciary. So I accept that responsibility to oversee the plans and to take the responsibility to make sure that things are done correctly and they're done in such a way that it benefits the participants, it benefits them in terms of the return and the preparation for retirement. But that was the big news coming out of the conference, is that may pass, and that's a landmark thing that's going to affect many businesses. It's going to give them an opportunity to spread out the cost and make it possible to fund 401ks as part of a much larger group than just the individual firm. That was big news coming out of that conference. I think that's a very positive thing that came out, and we're going to see the results of that maybe by August. Now, there was a whole lot more of information that went on at the conference. One of the things that came up was a study that J.P. Morgan Stanley has done. They found that 62% of funds in 401k plans are in target date funds. 78% of participants use a target date fund as their default fund, their qualifying default fund. 88% of participants in those 703,000 plans, 88% find target date funds very appealing. Even over half the people that are do-it-yourselfers use target date funds as their default fund. Morgan Stanley's estimate is that by 2023, 82% of 401k funds will be in target date funds. That's incredible, because most people don't understand fully the risk in a target date fund. The target date fund is set up logically reasonably to be something that really makes a lot of sense. When you're a young person, you should have a lot of stocks and very few bonds. When you're approaching retirement, you should have a lot of bonds and very little stock. That's the concept behind target date. They have what they call the glide path. This is the path of how you should build your retirement funds, building it over a period of time. And the target date fund is set up to do that. So that if you put away 10%, counting the match as well, if you put in 10% and it goes into a target date fund, in theory, you should have enough to retire on at your retirement age of 67. The issue is this. It sounds logical. It sounds reasonable. So did collateralized debt obligations before 2008, 2007. So did collateralized mortgage obligations. So did subprime housing structures. So did credit default swaps. So did structured products. And in the 80s, so did limited partnerships. All those things, which sound logical and reasonable, sound like there's something to be invested in because they're logical and reasonable. But what isn't is that the market isn't a logical and reasonable market. While it tends to be efficient in the long run, in the short term, it can be like a roller coaster. If we have, for example, as I believe the highest probability is, a time in which we see a lot of inflation going in the next 10 or 15 years, we have a real big uptick of inflation. What that does to bond prices is it causes bond prices to sink. When I got into the business, when I licensed in 1986, there were bonds that were paying 4 and 5% that were selling at 40 cents or 35 cents on the dollar. It was a disaster for a lot of people that own bonds. And yet I feel with target date funds, that's the way we're headed. Think of the person who's 50 years old and sees 80% or 85% of his target date fund invested in bonds and then sees the value of that drop by 50% because that's what's in bonds. That's the potential risk of a target date fund. I think it's not only a risk, I think there's a significant probability that's what we're going to see. And yet Morgan Stanley says they expect 82% of 401k funds by 2023, that's not far away, will be in target date funds. And it's the big thing that Wall Street is selling. You should invest in target date funds because they make so much sense. They keep you on a glide path until they don't. We saw in 2007, 2008, all the financial plans that were supposed to keep you on target to have enough money for retirement or for your children's education. We saw the disaster that happened for a lot of people there. I feel the same thing is coming with target date funds. At Adams Financial Concepts, we don't do any target date funds. We won't do any target date funds. We'll never do any target date funds. I'd rather die before I do a target date fund, but then that's me. Anyway, we're coming to another commercial break soon. I'm going to come back. I have a guest. I think she has a great story to tell. So you want to hear what she has to say? Then we're going to talk about the Money Show that's coming up in June. And I'm going to go into more detail on that. I hope you'll register to come to the Money Show. I hope you'll come to one of my sessions where I speak and we can meet face to face. Don't go away. We'll be right back after this commercial break.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So, I'm here with Tao Nguyen of Latte Salon at Bellevue. So, welcome to the program, Tao.
Thank you very much, Mike. Thanks for having me here. Honor.
So why don't we begin with your background like we usually do with our guests? Tell us about your background.
Okay. Well, long story short, so we're not sitting here all day yawning. I'm kidding. I grew up in Seattle, Washington, born and raised, one of few rare native from what I've heard, born and raised in Seattle, Washington. Went to Renton High School, graduated 2010. After that, I just, at that time, didn't know what to do with my life. Being 18 years old, only 18 years old. Didn't really have the funds saved for college, so decided to just take a couple years off, just work, normal minimum wage job until I figured things out then. And then somewhere along the line, I thought, let's try beauty school. It's, I'm always been into fashion and beauty and hair, so thought give that a try. Started beauty school, just never looked back. After I graduated beauty school, worked for a pretty well-known corporate salon here in Washington. And I've worked at many places, just never really found my happy place. So within, 3-4 years, just worked really, really hard, pick up a second job just to get some fundings. And here I am now with my very own salon. And we've been in business for about 2 years now, and proud to say we're probably the most diverse salon here in Bellevue. There's just everything and everyone, all ethnicity.
So let's talk about that. Let's talk about how many chairs you have.
I have about 6 chairs now. We're 1,300 square feet, so absolutely potential to create more if I wanted to. Just right now focusing on taking care of our current stylist.
And where are you located in Bellevue?
I'm off the freeway in Factoria, very convenient location.
And your hours?
My hours, we're 7 days a week. Well, the sign does say 10 until 8, but honestly, we're very accommodating for our clients.
So you'll work outside of those hours if someone makes an appointment?
Try not to, but if that's what it comes down to.
So talk about your clientele.
My clientele, well, each size here, I feel like we're all very different, which I'm so proud that we're all very different. We bring absolutely different strength to the table. But my specific clientele, being Asian, I feel like I draw in a very specific ethnicity group. So my clientele, they've tried everywhere in Bellevue. They try high end, low end, just never really found a place that was for them, because usually the size don't look like them or know their background or culture. So it's nice for them to come in here and just feel like welcome, part of our family.
So, but you have a particular part of your clientele.
My particular part of my clientele, I do cater to 9% men.
Okay, so why men? Did you train to have men as your clientele?
Did I train to have men as my clientele? No. So in beauty school, honestly, we've had probably half a day of men's theory, and just naturally men never went to get their haircut in beauty school because it's going to take 2 hours. So I probably did about 4 men's haircut in my whole entire year of beauty school. When I got out, just was never my comfort level, wasn't comfortable doing just short hair. Went to this corporate salon that mostly catered towards women. It's very known. But yeah, just not, and I specialized in color at that time, so definitely did not see any men at all. And after trying a few salons out, that was still the case. I realized I didn't really have a men clientele. And at that time, it was the beginning era of online dating for me. So, you go out, you meet all these guys, meet all these hot guys with really nice hair, and they find out that you do hair for a living. And they're always like, oh, cool, you can cut my hair, you can try cutting my hair. And it was just always so embarrassing to tell them I don't know how. So it's interesting. From then, I pretty much forced myself to be somewhere that only did men. And from there, we went through just such a huge volume of clientele every day. Eventually, I got better, and I think no, in my personal life, I got better learning how to deal with men too, and learning how to talk to them.
Learning about sports.
Learning about sports, all that good stuff. And naturally, my hobbies are, like cars and guns and golf. So I've always been surrounded by them. I just didn't realize it. So that plays a huge favor in my part, since I already have that network of men that I'm always surrounded in to come in and be my client.
So I have to share a personal story, because my mother-in-law was a beautician, and my wife learned from her. And so the last haircut I had up until about 6 months ago was $1.50.
Oh, wow.
Was a long, long time ago. My wife has been cutting my hair for the entire time of our marriage. Actually, it goes back to when we were engaged. And it was only because she got sick that I went to a barber shop to have my hair cut. And I can't remember if it was a lot more than $1.50. But even my wife had to admit that it was a better haircut than she gives. So, and the color was longer lasting. So it's well worth the time and well worth the effort to have you cut hair.
Oh, thank you very much. Thank you. And that's the thing too. In my specific neighborhood in Factoria, we are the highest priced services, and a lot of time I get questions of how do we compete with that? And back to the whole dating thing too, I think when you bring value to what you provide, what you can bring to your table, you don't have to worry about your competitor. You go out and you find your demographic that value what you can give them.
And I think, back in 2013, I did a whole series of programs on how people survived 2008, 9, and 10. And consistently through the whole thing, people said when you compete on price, that those companies that were competing on price for business were all gone, all bankrupt. It's about the quality that you give, and about the service you give, and about the value that you bring to the table. And that's more than worth the price. I also charge a high price, so.
Well, I'm pretty sure you are well worth the price.
So tell me about your stylist. Who else is there? What do they do?
Okay, so right now we have 6 chairs, 5 stylists. One is part-time. He works somewhere else in Seattle and comes here on Sunday for his Eastside clientele, and he's doing great at, his Eastside clientele still wait specifically for Sunday morning to come see him. He's a little bit older, so his clientele grew up with him. They're a little bit older too, but they're all really funky. Get all, like the extra tail in the back, or lines shaving their head, or different colors in their hair. So that's fun. And she moved right across the street from a Regis, so she has like her whole clientele that follow her easily move across the street with us. We're so happy to have her talent here now. What she can bring to the table, she's just so full of positivity. Her clientele, it's a mix. It's a mix. She does do both men and women, mostly women, mostly blondes. So, something different. There's Tilly. She has a huge community behind her back because she goes to church. So,
with that, tell us where you're located again in Factoria, in the mall area. Tell us where in the mall.
Okay, not in the mall, across from the mall.
Across from the mall.
Across the mall, just so you don't go to the mall looking for me and can't find me and go up to one of those 5 other salons.
So tell us the address.
Okay, it's 12816 Southeast 30th Street, Suite E, Bellevue, Washington. It's next to Jimmy John's, so
Okay.
I'm sure you can smell us.
And the phone number for somebody to make an appointment?
Oh, you know what? That is a great question. Let me look it up.
It's amazing. We can put names in the phone. There's a lot of phone numbers that I don't remember.
Okay, so it's 425-562-4768. We also do online booking if you're afraid to talk to people.
Okay, and tell us how you get to online booking. Tell us the website.
The website is our hair salon, so lottehairsalon.com.
Can you spell that?
Yes, it's LOTTE hairsalon.com.
And how would you go about booking?
How would I go about booking?
Yeah, just by logging on to the website, you can book with.
Yeah, it's really straightforward. We all have personal cell phones that you can contact us through there too.
Okay. Thank you, Tao. It's been interesting. And if you're listening to the program, go check it out. If you're a man, do it. If you're a woman, do it. It works for both. Anyway, I'll be back after this commercial break to talk about the money show and who knows what else. Stay with me. We've got it coming up.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I want to talk a little bit about the Money Show. The Money Show is coming to Seattle on June 15th and 16th. It's a weekend. It's going to be at the Hyatt. It's something which I'm going to be doing the Money Show in a couple weeks in Las Vegas. I did the Money Show in Orlando. And when I say I did it, I mean that I was a speaker at Orlando. I'll be a speaker in Las Vegas. I'll be a speaker in Seattle as well. And it's kind of a show which is evolving some. I've mentioned it before a number of times. Steve Forbes of Forbes Magazine will be here. Ralph Akambora will be here. Supposedly Bruce Johnstone the president of Fidelity was going to be here. Larry Kudlow, the chairman of the President's Council of Economic Advisors, was going to be here. Both of those don't show up on the program right now, so I don't know that they will be here. Edward Yardini, Louis Navalier, and of course, Mike Adams will be here. They expected to draw about 2,000 people, and I hope if you're listening to the program, you'll mark it on your calendars and you'll come hear me speak. I have 2 sessions where I will be speaking about superior returns with lower risk. That's what I do, superior returns, lower risk. I'll be talking about that. I will also be doing a session talking about how does this secular bull market end. Now, if you've been listening to the radio show for a while, you know that I've already talked about that. I'll be talking about that to a lot of people, hopefully, that I haven't talked to on the radio program before. In Orlando, it drew almost 5,000 people. In Las Vegas, it's expected to draw 5,000 people. Here, it should draw a couple thousand people, and it's completely free. All you have to do is sign up for it, come to the event, and it is free. It's paid for by the exhibitors, and of course, I am one of the exhibitors now that I've decided that it makes sense to be an exhibitor. You can see some of the presentations. You can log on to the Money Show Orlando. You can see my presentation there. So you could see it there. You could see it in Las Vegas. You could see it online in both of those places. Or actually, if you want to come to Las Vegas, you could see me in person. But anyway, I'm almost joking. Not that anybody's really laughing, but anyway. So the Money Show this time, I do know some that are going to be here. Ralph Akampor is going to talk about the stock market between now and year end. And I believe that he and I don't see eye to eye on where it will be by the year end or what's going on in the long term. But I think it's worth hearing what he has to say and getting his perspective. Chris Gaffney is going to be talking about a solution for today's volatile markets. he talks about global investing. And as you know, I don't do global investing. I look for companies that have global exposure, but don't do global investing. And if you listen to the program, you know why I don't do that. There's a number of guests or speakers who will be talking about trading, actively trading. I always find it interesting that a lot of people equate trading and a lot of activity to performance. It reminds me of the locksmith who you hire, and he comes because you've forgotten your keys inside the house or whatever, and you need a locksmith, and he comes and he spends an hour and finally gets the door open. And you do the same thing a month later, and the guy comes to the door and he gets the door open in 2 minutes. The idea most people think is the guy that deserves more is the guy that spent the hour, right? Because he spent an hour getting the door open. The fact is they both got the door open. One guy got it in 2 minutes, one guy took an hour. What you're really paying for in the hour is incompetence, in my opinion. But anyway, that's my approach. I think that a lot of trading, I do 1 or 2 trades a year in my client accounts. We've had one stock in most client accounts. It first went in 1996. So we are now 20 some years later with the same stock. And I trimmed it back. I sold 50% of it at one time and then bought it back. But essentially that same stock has been there, and the cost basis is very, very low. It's done very well for us. Anyway, all I'm saying is there's a number of people that do trading. Jim Stack will be here. Jim Stack is going to be talking about the 5 bear market warning flags that will save your portfolio. Jim Stack is a person that looks at the market and sees a bear behind every tree. But that's, it's worth listening to that. So Ken Fitzgerald's going to be talking about every dollar invested you'll make in the next 10 years is on this list. I don't know that I believe that, but that's what he'll be talking about in terms of stock. And Steve Forbes will actually be talking about why the stock market should boom. And if you've been listening to my program for a while, you know that I believe that the stock market is in a period of time when we're going to see 100,000 on the Dow. I've been saying that since the market was less than 6,000. So anyway, hang on. We've got a ways to go. That's what Steve Forbes will be talking about. And Ralph Acampora is a technical analyst, and he'll be talking about technical analysis, an integral part of quality research. That's what he feels. Marilyn Cohen is a bond market specialist. She'll be talking about the Internet of Things as a bond market game changer. We'll see. And how will this secular bull market end? That's my program, by the way. That's me. 3 secrets to bulletproof your portfolio in 2019. There are going to be 4 speakers, all certified financial planners, certified financial analysts, CPAs. Be interesting to hear what they have to say. I don't know that you need to bulletproof your portfolio. I think you want to see it grow. But anyway, generating 6% dividends or more for retirement without spending down your capital is going to be the subject of Tim Palin. How to protect your portfolio using put options. Bob Lang. I've been to a couple of his presentations. Ask me outside of the radio about what I think about it. That's all I'll say about that. Anyway, those are the kinds of programs that are going to be presented at the Seattle Money Show. I think it's really, really important to hear. Jack Ablin, who I've quoted his book a number of times, is going to be talking about goals-based investing, an overview. This is the new thing. Remember, financial plans essentially blew up in 2008, 2009. I've talked about why it doesn't work. There were a lot of problems in 2008, 2009. Anyway, now the new buzzword is goals-based investing. It's essentially financial planning in a different wrapper. But anyway, Jack Ablin's going to be talking about that. and I don't mean to be negative. I think it's something worth listening to. A Cure for the Summertime Market Blues is coming. ETFs and mutual funds, why you need both. I don't believe you need both, but anyway, that's a session coming up, and I don't want to put that down or be negative about it. I think it's worth listening to everything and what they have to say. I will listen to a lot of people who completely disagree with me because I think it's well worth getting that information, because sometimes I can be wrong. Did I really say that? Sometimes I can be wrong? Actually, I think I did say that. I wonder if that was the wrong thing to say. No. Anyway, that's coming up. The Money Show's coming up. Please do go. Come to the Money Show. Please do sign up. Register. Check it out online. Sign up for it. Come hear me speak. Come see me in person if you've only been listening to me on the radio. And listen to some of the other speakers as well. I think there's a lot of information you can gain. Anyway, that wraps up the program for today. You can find this program on YouTube. You can find a podcast on our website. Do check out all of the things we've been talking about. And do go to Latte Salon. That wraps it up for today. Have a great rest of the weekend. And I will be back next Saturday to talk about the answer about money. That's where we are today.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you'd like Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1590. The Answer. The preceding program was sponsored by Adams Financial Concepts.